if they're going to have to over-tighten to catch up.
Jim Bullard
and
certainly thinks that way.
Yeah, it's in a situation we haven't been in.
Yeah.
A whole generation of investors has not been in this situation, and let's not kid ourselves and think we were when oil prices were spiking in the 2000 to 2008 scenario. Very different inflationary landscape today.
This is our world, and this is what investors are grappling with. Gina, thank you so much as always. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, and Kriti Gupta, Markets Correspondent at Bloomberg. She'll be back with her chart of the day a little bit later on.
Let's get to Washington, D.C. for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Diplomats and analysts are scrutinizing today's comments from Russian President Vladimir Putin. His foreign minister, Sergei Lavrov, urged Putin to continue talks with the West. Putin responded to Lavrov's proposal, saying, "All right." President Biden told Ukrainian leader Volodymyr Zelensky yesterday that the U.S. and its allies would act swiftly and decisively if Russia were to invade Ukraine. Commercial trucks and other vehicles are finally passing over the Ambassador Bridge connecting the U.S. and Canada following nearly a week of protests from truckers over vaccine mandates. The Senate is back at work this week considering bills to save the Postal Service and fund the federal government. Bloomberg's Amy Morris has more from Washington.
Senators have until Friday to pass a continuing resolution to fund the federal government. The stopgap measure would last until March 11th, while lawmakers continue working on an omnibus spending bill for the rest of the year. The Senate might also consider the Postal Service overhaul, which would save $50 billion over 10 years. The House sent the wrong version to the Senate without amendments, so the Senate would have to send it back to the House first to be updated. In Washington, I'm Amy Morris, Bloomberg Radio.
A new study indicates Western states have experienced the driest 22-year period in at least 1,200 years. The authors of the study also concluded dry conditions will likely persist for years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. They're in our D.C. bureau. A couple stories we want to bring to your attention that are certainly within the pandemic realm. One has to do with a top Levi Strauss executive saying she left the company after more than 2 decades because her outspoken opposition to COVID-19 policies in schools created a fraught work environment for her.
Yeah, we're talking about Jennifer Say. She was the company's global brand president. She said that she actually passed up, Carol, a $1 million severance package that would have come with a non-disclosure agreement. This so she could publicly discuss the circumstances of her departure. She shared her story in a 1,700-word post in the Substack newsletter of writer and editor Barry Weiss.
Wow. In the post, she described her 2-decade rise through the company as marketing director and chief marketing officer, culminating in her naming as brand president. That happened in 2020. At the onset of the pandemic, she frequently wrote op-eds and appeared on news shows and at rallies to advocate for schools to reopen without mask rules. Here's what she wrote, quote, "I felt and still do that the draconian policies would cause the most harm to those least at risk, and the burden would fall heaviest on disadvantaged kids in public schools who need the safety and routine of school the most."
She did say that in the fall of 2021, CEO of Levi's Chip Bergh told her that she was, quote, on track to become the next CEO of Levi's, but she did say that Chip Bergh added that the only thing standing in her way was herself and that she needed to, quote, stop talking about the school thing.
She got a lot of pushback on social and also from her colleagues. She said Levi's heads of corporate communications and diversity asked her to quiet her views on the topic and go on a, quote, apology tour. At least this is what she said.
It's interesting. Levi's based in San Francisco. It's known for being vocal about political stances, which is relatively rare historically for corporations, which try not to alienate wide swaths of consumers. But Say says that in her post, she contrasted it with Levi's treatment of her views.
This is tricky because we're also asking leaders to step up and speak out on major issues. In the meantime, if you're having a great Monday, we're just going to put this out there. Bird flu reaching more U.S. states, raising the prospect of new curbs. And we're talking about Kentucky, Virginia, also some whiting out in Indiana last week. Happy Monday, everybody.
Happy Monday.
Happy Valentine's Day.
Thanks, Carol.
You're welcome.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. A bunch of headlines out there in terms of COVID. We did see several countries moving toward easing travel restrictions, so that's happening. We see, mask mandates kind of coming off, and we're moving forward, although I highly recommend you check out the Bloomberg Big Take from over the weekend. It's a reminder.
We're not out of the woods yet?
We're not. Michelle Cortez, who's covered it for us here at Bloomberg News, is just saying, sorry, guys, there are more variants to come, and it's going to be more disruptions to things like supply chains and so on.
I read it on the plane back last night, and I was like, oh, Michelle, come on.
Happy
on
Valentine's Day.
Have a good week.
All right, so let's bring in Dr. John Abramson. He's lecturer of healthcare policy at Harvard Medical School. He's got a new book out, Sickening, How Big Pharma Broke American Healthcare and How We Can Repair It. He joins us on the phone from Boston. Dr. Abramson, nice to have you here with Tim and myself. Let's get right to it. Your book really strikes at big pharma. What's your mission here?
My mission is to explain to the American people that American healthcare is performing very poorly. We've ranked 68th in the world in healthy life expectancy, and to achieve that lowly state of health, we're spending $1.5 trillion more than the other wealthy countries as a percentage of GDP. So it's a disaster.
But we've known this for a while, so, right? Like, this has been out there, this stat. I feel like whenever we talk about American healthcare systems for the last decade at least, we talk about how much we spend and how much is bad. So what do we do?
Right. So what I have to contribute is that I was a family doc, and I was a Robert Wood Johnson Fellow and trained in research, design, and epidemiology and statistics. As my career went on, I started to see the commercial influence coming. And the missing piece, we talk about these things all the time, Carol, and people are aware of it. It's hard to comprehend how bad it is. But the missing piece in all this is something that I can contribute, which is that the commercial interests doing their job to maximize the financial returns that they deliver to their investors have taken over the knowledge that even the best doctors trust about how best to care for patients. And this extends from their determining the research agenda, so 96% of our new knowledge is about drugs and devices, to controlling the conduct of the studies, the analysis of the studies. When the studies are completed and the manuscripts are sent into the journals, the peer reviewers and the medical journal editors don't even get to see the real data. They just get to see the data that's included in the manuscript. And when the experts who write clinical practice guidelines set the standards for all doctors about how to practice quality medicine, they don't get to see the data either. Wow. So what we've had is this quiet revolution in the control of our medical knowledge over the last 20 or 30 years. And the docs are trying to practice evidence-based medicine, but they don't understand that evidence, the fundamental purpose of that evidence now is to maximize returns to investors.
Can you draw a line from what you're talking about here to the nearly 1 million Americans who have died as a result of COVID? That is our healthcare system. Our healthcare system, yeah. the health of the American people.
And to is it billions now that have gotten the vaccine, or millions that have gotten the vaccine?
Yes, billions. Yes, part of the line. The COVID vaccines are both the height of what pharma can do for us, and it shows also that their business model of maximizing their profits is not going to work in the end. Because what we've done is we have these fabulous vaccines. We pay a lot, the drug companies are making a lot, but fine. But what happened is that there was no control on where those vaccines were sold. So they're being sold where the drug companies can make the most money. And the third world is getting left out of this. So Africa has a vaccination rate of approximately 16%, I think now. And what's happening is the Delta variant came from India when 4% of people were vaccinated. The Omicron variant came from South Africa when 10% of South Africans were vaccinated. And the business model of the pharmaceutical companies, the vaccine manufacturers, is to keep selling their drugs for top dollar. But it's a global pandemic, and until everybody's safe, nobody's safe. And these variants, like Delta and Omicron, are going to keep coming back to affect Americans, and we're going to keep having waves of this, as Michelle, your reporter, wrote.
Wow.
So, who do we target? You know, I've had a brother who was in pharmaceuticals for a long time, and we've had some great debates go round and round. But I do wonder, how do we make it better? You mentioned we spend so much, and I'm very grateful, having traveled and been exposed to sometimes healthcare systems outside the United States. I do know that we are privileged, but not everybody's equally privileged. And yet, the costs are extreme, and it's sometimes cumbersome and difficult to manage. Just got about a minute left here. So what do we do? What's your top 2 things that you change that we make it better?
Yeah, Carol, there are a couple of things that would really improve it. One is we in the United States do not have health technology assessment. So the FDA tells us doctors what drugs we can prescribe, but it doesn't tell us what drugs we should prescribe in terms of being most effective and most efficient. So we need an external body that can tell doctors what the data really show about whether new therapies are better than older therapies, and what the most cost-effective medicine is. The other thing that we absolutely need is transparency of clinical trial data. It's craziness to be trusting journal articles because they're peer-reviewed when the peer reviewers don't have access to the data. It makes no sense.
Well,
it takes us... Yeah.
No, forgive me. We're running out of time. Sounds like some things that we need to put front and center. I do hope you'll come back, because I think this is a conversation that we've got to spend a little bit more time with us. And really, you've been gracious with your time today. Dr. John Abramson over at Harvard Medical School. Check out his book, Sickening: How Big Pharma Broke American Healthcare and How We Can Repair It. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg
Connection
960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Ever been to Universal theme park?
I have when I was a kid.
Roller coasters?
Yeah. That's what you're talking. Are you talking about the markets?
Yeah.
Yeah, that was a good. Gina Martin Adams talking about that was a really good visual.
I mean, if you look at the charts today, that's exactly we're up, we're down, we're all over, we're just bouncing off our lows. A lot of it has to do with those tensions between Russia and Ukraine.
Yeah, we're going to speak all about that with Joe
And the rest of the
Matthew,
world.
the host of Bloomberg Sound On, in just a minute. In the meantime, let's get a check of what exactly is happening in those markets. Here's Charlie Pellet.
All right, got it. Charlie breaking down the markets. The market's certainly reacting to those headlines overseas. We just got a read spike on Ukrainian leader Zelensky spooking markets with what appears to be a sarcastic comment about the rest of the world, predicting a date for a Russian attack, which he said should be a day of unity instead.
Well, joining us now is Bloomberg's Joe Matthew. He's the host of Sound On. He's in our 99.1 studio in Washington, D.C. Joe, you've been following this closely. Minute-by-minute developments here. What do we need to know?
Well, it really certainly shows you how focused the market is on this. We're at the point now where a sarcastic remark is moving prices. It's all because officials have told us this is the sweet spot. This is when, if Russia attacks, it's going to happen. We've heard reports saying Tuesday, maybe Wednesday. That's not Bloomberg News saying that, but this is out there in the mainstream media that this could be any moment. But there was some relief this morning, guys. The strongest indications yet that Russia will try to continue the diplomatic path. You heard the all right remark. Little has 2 words done so much to move the markets. Talking to Sergei Lavrov, that was Vladimir Putin. He said, all right, to the suggestion that Russia continue talks with the U.S. and with NATO allies. So it seems we've got a couple of days here. Remember, the conventional wisdom was that Russia wouldn't do anything until the end of the Olympics. Then that started to change at the end of last week, and we had this real sense of urgency coming out of the White House. I'll remind you, the Chancellor of Germany today is with Zelensky in Ukraine tomorrow. He will be meeting with Vladimir Putin. And that's going to be an incredibly important conversation.
Joe, what's the end game? I'm thinking about, Americans out there are thinking, wait a minute, I'm really more concerned about inflation and what's in my pocketbook, but should we be paying attention to what's going on? Because what's at stake here?
Yeah, well, look, oil prices have been moving pretty dramatically, and there are concerns that if there was, in fact, a military incursion, you see crude go magically to $100, and then you see demand destruction follow. There are a lot of different gyrations that could happen in the markets here as we consider sanctions, Carol. That's the big question. We've talked a lot about sanctions for weeks, in fact, but we don't know exactly what the plan is going to be. It does seem that this White House has turned away from the idea of any sort of preemptive sanctions, if you will, that anything that happens would have to involve Russia crossing the border. But the fact is, we've still got over 100,000 Russian troops on the border with Ukraine, and you can't stay there for that long battle ready. This is something Leon Panetta talked about on Balance of Power with David Weston earlier today. That's why they see this window as being short. You can't keep them there forever, and the ground is going to get too muddy for these tanks to roll at some point. So the next week is critical.
Joe, where does the international community stand, specifically the United States versus the rest of Europe, and to what extent do they have power beyond sanctions?
Boy, power beyond sanctions is a real question, and I'm not sure there is a lot. That's why we're still here and why this has gone on for so long. I mean, this status quo has lasted weeks. To think that that many troops and that much equipment has been sitting around for that long is pretty hard to believe. There have been questions, as you know, about the commitment that Germany has here. They've got a major economic component here in their relationship with Russia, and a lot to lose. If sanctions were to be implemented and Nord Stream 2, the pipeline, were to be canceled, that's going to be on the chancellor tomorrow to express his strongest feelings about this and tell Vladimir Putin that we're ready to take the hit ourselves, that Germany will pay economic consequences just to punish you for what you may be about to do.
Why are we here?
Seriously.
No, seriously. Like, why are we here at this moment in time, Joe?
Well, in the greater existential sense, I have a hard time answering that. But this is obviously an occasion in which Vladimir Putin felt emboldened enough to do this and thought the rest of the world, and namely the U.S. with its own domestic divisions, was distracted enough for him to pull this off, remembering that his whole goal here is to slow or stop the expansion of NATO. Yes, you can talk about rebuilding the old Soviet empire, but he wants us to stop in our tracks. And the suggestion today that the U.S. might be willing to discuss the movement of missiles and troops and so forth around Eastern Europe, that seemed to get his better graces and lead to the all right remark.
So, Joe, where are you watching now for the next move?
Well, I think, like I mentioned, that meeting tomorrow with the Chancellor of Germany is going to be incredibly important. If that doesn't go well, things could feel real different tomorrow. But we like the idea that there is at least some direction here when it comes to diplomacy, that this is the State Department more at work than the Defense Department, Tim.
Russian economy, is it ranked 11th?
Huh.
I don't know. Sorry, I didn't mean to put you on the spot.
No,
I'm looking
that's
to
quite
find,
all right.
I'm trying to figure out
tell
how
you.
important it is, like in terms of the global economy. It's obviously important to Europe.
It's no Russia, that's for sure. Yes, it is. As John McCain famously said, the late senator, it's a gas station masquerading as a country. That's not necessarily fair. Russia has long, wonderful culture, I'm sure. But in terms of its economy, it's pretty narrow.
Yeah.
And when you compare it to a China, for instance, it's nowhere.
But a lot of political might, that certainly
That's
is
true.
Vladimir Putin. Joe Matthew, thank you so much. Host of Sound On. He'll have more coverage certainly at 5 p.m. Wall Street time.
Yeah, thanks so much, Joe. Hey, from Washington, D.C. to Washington, D.C., we go to World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. Well, the Kremlin is signaling it's ready to keep talking with the West about security grievances that led to the current Ukraine crisis. Former Defense Secretary Leon Panetta tells Bloomberg this, though, is still a dangerous moment.
The more that you have this concentration, the more you build it up, the more there's a chance that a mistake can be made, a misjudgment can be made, a wrong move could be made. That could obviously explode the situation.
Panetta says the proposed sanctions on Russia's energy sector are likely the biggest concern for Russian President Putin. President Biden is marking 4 years since the Parkland High School shooting with a call for Americans to keep each other safe.
The president issued a statement 4 years to the day 17 people were killed inside Stoneman Douglas High. He says the heartbreak of that day sparked an extraordinary movement that's making sure victims, survivors, and responsible gun owners' voices are louder than those of gun makers. lawmakers and the National Rifle Association. The president's efforts to pass tighter gun laws in his first year have come up short. Michael Bloomberg, founder and majority owner of Bloomberg Radio parent company Bloomberg LP, donates to groups that support gun control, including Everytown for Gun Safety. In Washington, I'm Nathan Hager, Bloomberg Radio.
The largest U.S. airlines have been working with the Biden administration for months to create a nationwide no-fly list that would ban the worst of the unruly passengers from flying commercial airlines. Sources tell Bloomberg News discussions have intensified in the past 6 months among airlines, trade groups, unions, TSA, and Homeland Security. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, so roll back the clock about 12 months, and we were all in on SPACs.
Oh, you were too?
SPACs were on a tear.
They were
not
on
me
a
personally,
tear.
but in terms of performance, on a tear.
Yeah, remember the Bloomberg 50, right? The Bloomberg Business Week 50. Each year there's an inanimate object that is the Bloomberg 50. For, I believe, 2020, it was the SPAC.
Exactly. 2020?
Yeah, I think for 2020 it was a SPAC.
Or 2021? You talking about last year?
Yeah, was that 2021?
Yeah.
Okay, 2021.
But 2020, I think it was like chicken wings or something. Or no, I think it was the sandwich. What was the
chicken
sandwich?
the Popeyes chicken
The
sandwich.
Popeyes chicken.
Yeah, which I still haven't had.
Well, SPACs are down 16% last year in 2021. But if you look at a chart, right, they were going up early in the year, and then they just started to go down. And our Bailey Lipschultz has a story on the terminal that says the pace of blank check mergers failing to cross the finish line, accelerating as the industry grapples with waning investor interest. I mean, just not interested.
Yeah, check out these numbers here. At least 6 mergers with special purpose acquisition companies have been canceled this year. That's on pace for a record number of nixed deals in a single quarter. At least 22 have been spiked since the middle of 2021. That's according to data compiled by the Chicago-based SPAC Research, which tracks the industry. Carol, that compares to the 26 tie-ups that were called off in the more than 5 years prior.
Well, and it's interesting, right, because they're these SPACs, right, and they've got to put money to work within a certain time, right, and if they don't do a deal, then they actually have to
Give the money back.
give the money back.
Yeah, to investors. And there was a lot of conversation. I think the conversation continues as well with, okay, well, if you have all these SPACs raising money, what does that mean for the targets, the companies that they go after to merge with?
Right.
What if they don't find a company that they think is worthwhile, but they don't want to give the money back either? Does that mean that the quality of the companies that they're going and acquiring isn't up to snuff?
Could be, right? Exactly. Uncertainty in the industry is being fueled also by jitters over the Fed's pending interest rate hikes and a glut of SPACs hunting for private companies to take public, which is what Tim was just talking about. A market for additional financing that aims to help backstop some deals known as private investment in public equity, or PIPE, also drying up. So we're just seeing a lot of things kind of take them down. You're listening to Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much, Charlie Pellet, with that Bloomberg Business News Flash. Well, in the current issue of Bloomberg Business Week, a story about unicorns. You know, the startup companies worth about $1 billion or more. And as it turns out, Tim, more are being minted every day.
In fact, there are a couple being minted every single day in 2022. It's almost like Joel Weber. We need a new name for unicorn. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. The story we're referring to is by Ellen Hewitt, startups reporter for Bloomberg News. She joins us on the phone from San Francisco. Check out her story. It's featured in the current issue of Bloomberg Business Week. It's available on the Bloomberg and at Bloomberg.com/businessweek. So what do you think, Joel? A new name for unicorn? Because they're not all that rare.
I don't know what name that would be. Maybe Ellen has ideas.
That's Eileen Lee, right?
Yeah.
Who came up with the name unicorn, in 2013.
But Ellen sent up a flare a couple weeks ago and basically said, we're about to hit an interesting threshold, which is 1,000 startups that will be worth $1 billion or more, which I think is a really interesting moment to kind of look back at this. I mean, in the tech world, this has been a trend that has really helped define where companies go and increasingly where public markets go. And it didn't take that long for us to get there. So, Ellen, what was the 1,000th unicorn?
So there's arguably two, because there were actually two that became, were born, quote unquote, on February 2nd, which happened to be the day that we hit the 1,000th number. We chose to profile one of them. It was a company called Product Board, and I could not have come up with a more inside baseball Silicon Valley company had I tried. They make software for product managers to help them more effectively manage product development, which just means like building a new app or a new feature or something like that. And it's just like, PMs are a big deal at tech companies, and this is just a product made for them. They're based in San Francisco. I mean, it was pretty funny. But yeah, I mean, it was a huge deal for them. But most people don't bat an eye. Like, as reporters, if we get pitched a company saying like, hey, we raised money and now we're a unicorn, like that doesn't move the needle for us at all.
So if it wasn't called a unicorn, what would it be called?
Well, what's funny is I talked to Aileen Lee, who's the VC who originally came up with the term, and she said when she was first writing the blog post about unicorns, she was like, I was trying to think of a good term, and I thought of like home run or monster hit or these things that were like pretty cheesy. And I told her, I was like, as a writer, I'm so glad that you picked unicorn, because there are a lot of fun metaphors you can make with it that help spice up, any sort of article about
and provide art, like very memorable art for magazine stories.
Yeah,
to
the art
those stories.
and the spread is amazing. I really encourage everyone to look at the print version. It's quite beautiful, including an illustration of actually 1,000 unicorns. Yeah.
I have actually wondered what a unicorn really looks like, because I've never seen one in the wild.
Have you not watched Harry Potter?
Fortunately,
Come on.
Fortunately, I have this Bloomberg Business Week Atlantic article and the art associated with it to show me. Hey, Ellen, I'm wondering why these companies are staying private longer. This is something you explore in the piece. Traditionally, companies that have been worth so much, they would have, IPO'd.
Well, and if you look at the unicorn list, so at the time that the term was first coined, which was 2013, the most valuable private company that was on that list was Twitter. It was worth $10 billion. Now, if you look at the list, the most valuable unicorns on the list are ByteDance at $140 billion, SpaceX at around $100 billion, and Stripe at, I think, 95. And I mean, these, an order of magnitude above what we used to have less than a decade ago. And, a lot of the big names that used to be on the unicorn list are public, so like Uber, Lyft, Airbnb, WeWork, all these companies. That being said, obviously there's a lot more flexibility for companies to stay private longer. And I think, Stripe is a good example. Their ability to raise money is limitless in the private markets. Why would they go public? It's the same story that we've heard people worrying about for the last 10 years and the reason you see all these public market investors coming to the private markets, these companies are not interested in going public if they don't have to.
Yeah.
And they really don't have to.
Right? There's so much money out there. So, Ellen, what does it take for a reporter who follows startups to get excited, especially when it's not so unusual for there to be a billion-dollar company? And I think about our audience who's listening when we talk about these companies that hit that billion-dollar status. What are the ones that they should be maybe paying more attention to? Is it that 19 billion, 20 billion? What is it?
Oh, my gosh. Well, it's funny because, now as a result of how many unicorns there are, you are seeing these ridiculous neologisms like decacorn, a classic, right? So 10 billion or more. But somebody was telling me hectacorn is now in vogue because that's 100 billion or more. I mean, it's or like mega, people talk about mega funding rounds now of like 100 million or more in funding. I mean, the goalposts just move farther. And so I think as reporters, we are looking for companies that stand out for some other reason. And I think what's tough is like for the company's perspective, like hitting $1 billion valuation is a really good sign that you've built something very strong. This is what the VCs have told me. It's like, it means you've got a good product, but it's no longer enough to stand out on that alone. And especially these companies are really competing over recruiting. So that tends to be a place where they hope that having this high valuation that is made public through news reports will help, but it tends not to help with recruiting. They need to show that they're special in some other way.
Ellen, are we going to anticipate any sort of slowdown in these valuations, or is the money free-flowing right now in Silicon Valley?
I mean, it feels like it's just been so many years of people saying, like, is there going to be a slowdown in the private markets? And there really hasn't been. Obviously, you see individual companies that maybe were overvalued, like WeWork or Theranos or whatever, and you see them collapse. But, I mean, the trend lines have only been going up. And even when there's been volatility in the public markets, it hasn't usually shown up as strongly in the private markets. And look, COVID was actually really good for all these companies, which was kind of surprising too. I mean, a lot of them make software, and the more digital our lives become, the more these become valuable.
I got a word, Ubercorn. That's what I would do. All right, Ellen Hewitt, great stuff. Check it out online. It's really gorgeous in terms of how it's laid out. She's our startups reporter at Bloomberg News, and our thanks to Jill Weber, editor of Business Week. It's in the current issue of the magazine.
February is Black History Month, and every day this month we're celebrating significant moments in U.S. Black history. Now with your installment for February 14th, here's Bloomberg's Renita Young.
On this day in Black history in 1867, Morehouse College was founded. Back then, it was called the Augusta Institute, housed in the basement of Springfield Baptist Church in Augusta, Georgia. But then it would move to Atlanta in 1879, go through a couple of name changes, eventually in 1913 becoming Morehouse College. It was honoring Henry Lyman Morehouse, the corresponding secretary of the American Baptist Home Mission. Famous graduates of Morehouse include Dr. Martin Luther King Jr., Spike Lee, Samuel L. Jackson, and Herman Cain. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today's installment of Today in Black History.
All right, coming up, we're going to head on over to our TV colleagues, talk about the markets which have been bouncing around. We're off our lows, but more to come in a moment.
the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by our colleagues back from the Super Bowl, Carol Massa, Tim Stenovic. We together welcome our cross-audience, cross-platform, TV, radio, YouTube, to once again dissect how concerned we are about geopolitical risk right now.
Yeah, definitely playing out in the markets. You can see the back and forth, the gains, the losses. What's interesting for me, I've been watching the travel stocks, which initially rallied. There was some easing of those Ukraine concerns and geopolitical concerns, but now we know they're back down. Expedia, though, holding on to its gains here today, Tim.
Yeah, it's interesting. I think, this year a lot of investors trying to figure out where the 2022 bottom is, at least in the choppiness that we've seen over the last few months. At session lows today, we're just over 1% from that low that we saw back in January 27th. So we're pretty close to the bottom.
Talking of bottoms, I mean, we're not at the bottoms of the day. We're off by 0.7% overall in your Dow Jones Industrial Average. Your cyclicals have been feeling the pain, oil, energy in particular. But I'm looking at an S&P 500 off by 0.6%, 29 points lower. We're seeing the Nasdaq actually still your outperformer on the day, down by just 0.1%. That's 17 points lower. Remember, though, you've been trading up about 0.5% higher earlier in the trading session. Russell 2000 down 0.2% on the small caps.
And on a sector level, the day's moves are pretty much a reverse of what we're seeing year to date. On a year-to-date basis, energy and financials are the big outperformers and the only two sectors in the green. Today, of course, financials and energy are the worst performers. Energy, and this is an interesting one because we've seen oil really rebound here today, but energy stocks are off about 2.8%. Financials as well, despite, further yields rising. It's a flattening yield curve that is still about 40 basis points. Up in the green, though, remain discretionary, and believe it or not, technology.
Yeah, technology. In fact, I mean, if you're looking for a risk barometer, Netflix shares been higher on the day for a good portion of the day. They remain higher by about 1.5%. In fact, you're actually seeing quite a few of the tech names, including Amazon, Tesla, NVIDIA, AMD, Alphabet, all higher here on the day. Splunk shares higher by about 9%. This on the back of that report, first out of the Wall Street Journal, that Cisco had apparently approached the company about a potential takeover. Bloomberg later reported that those talks broke down and that there right now is no deal in place. Nevertheless, investors, I guess, speculating that maybe something could be afoot. Those shares now camped out right around 125. Also in M&A news, or maybe not M&A news, the new CEO of Peloton gave an interview to the Financial Times, basically saying he's in this for the long haul, no intention right now to sell off this company. And Lockheed Martin, another M&A story that could have been that Aerodyne rocket jet deal apparently being scuttled. This, of course, after the Federal Trade Commission here in the United States sued to block that deal, Carol.
Becoming a bit of a theme. Meanwhile, let's go to where the action has been throughout the day. It's actually been in bond yields. And once again, this is a Taylor Riggs kind of a day because we're looking at curve flattening. US 2-year, 10-year now at 40 basis points overall. We're once again on the downside. We're seeing the 2-year yield spike higher today, but much larger spikes than we're used to seeing than in the 10-year at the moment. So once again, that gap closing in the 2s, 10s, but overall borrowing costs both pushing higher today. Is it more about what James Bullard was saying a little bit earlier? Is it more about how fast the Federal Reserve is going to have to go in March?
Yeah, I'm glad you took me there because Jim Bullard or Mary Daly, depending on which Fed speaker you want to pay attention to, they are looking at things somewhat differently, some more hawkish, some more dovish. We'll have a lot of economic data points today and throughout the week, I should say, that are really going to help us with this. Now, Mary Daly, she's much more dovish. She's, of course, president of the San Francisco Fed. She weighed in on CBS's Face the Nation over the weekend about being measured and data dependent. We've heard this before. Check it out.
What I would favor is moving in March and then watching, measuring, being very careful about what we see ahead of us, and then taking the next interest rate increase when it seems the best place to do that. And that could be in the next meeting or it could be a meeting away.
All right, of course, Mary Daly, president of the San Francisco Fed. And guys, this is where we are, right? This is the debate out there. Does the Fed take it more slowly? Will it be data dependent? Or does it need to be aggressive to appease investors, Tim, at this point?
Yeah, with PPI, we get that later this week, tomorrow. So we'll get a little more data there about producer prices. The question, though, is 50 basis points? Does that happen at the March meeting? Does that happen
what's
in
the data
one
we're
fell swoop?
using? I mean, can someone map that out for me? Because I saw the data on Thursday. I saw the data from the previous Friday. I mean, the data that we've had over the last few weeks and months seems to be pretty persistent in giving us a story not only about inflation, but also, of course, a tight labor market and a hot economy. What other data are we looking for?
Should we do it? Our daily reminder.
I know what you're going to say, Taylor.
QE.
We're still buying bonds.
There it is.
We're still buying
There we
them.
go.
So when we talk about a slowdown, when we talk about raising rates, we're still in an accommodative phase here.
But the market isn't buying bonds today. I mean, there's an interesting story out we're going to discuss a little bit later in terms of Goldman Sachs and the likes calling that it's time to sort of sell what you can in this current environment, that looking at investment grade bonds, but whether or not that's now looking at how much further, is there a ceiling to also where yields can really go? You were just bringing this up, Taylor, about Jochen Fels over at PIMCO saying, yeah, there is, because actually you look at the fundamentals and the savings rates, they haven't gone anywhere.
And Tim, this actually brings up a good point. I thought this was interesting that investors are selling off investment grade debt much more than they're selling off high yield, because interest rate risk is much more of a concern right now than credit risk. So in one way, that could actually show the risk appetite and the risk seeking that's still on the table. You could argue as well that the shorter durations are within that high yield. So selling off the investment grade shows that a Fed move and that rate risk is still the front and center issue.
Yeah, it absolutely is. The other thing I would point out, I don't know if you guys read this in over the weekend, Michelle Cortez of Bloomberg News doing a Bloomberg Big Take and basically saying, we ain't over the pandemic, guys, and we're not out of it until the whole world is out of it. And that until the whole world is out of it, we're going to see supply chain disruption. Yeah. We're going to see problems, people not going to work. And so, again, the global economy doesn't right itself, and we're going to see that continue to play out in those data points.
I am curious. It was a great read by Michelle Cortez. But I am curious, too. I mean, the one thing that seems different versus where we were a year ago or, of course, back in March of 2020 is that the governments don't seem to be so keen, with maybe a few outliers like China, don't really seem to be keen to really go back down the road of more mandates, more lockdowns, things like that.
I agree, but China is so important when it comes to global supply chains. Yeah. So if China isn't relaxed, then you kind of have to throw everything out the window, because if we see
when you were out in Los Angeles, did you guys go out
down,
to the port to do some real reporting?
We did not make it to the Super Bowl. Have you seen the traffic there? Do you know how long it would have taken us to get to the port?
Hurt.
Whose house were you?
We actually did real reporting, and it was amazing to see the amount of construction going on, people out there. It felt like we were not in a pandemic.
Questions, or you think she just ignored?
I listened to it.
I did some real reporting. I got some non-alcoholic drinks versus alcoholic drinks, and I taste tested them. And
we looked out. We did look out the window of the plane and looked out into the port.
Did you know beer seltzer is a thing now?
It is a thing.
That's according to the Super Bowl.
There was not a lot of beer seltzer.
Which I thought beer was
at
already
the cocktail party after our non-reporting and non-real broadcast.
I thought seltzer was so 2020.
All right, it's Monday. We are back together again. We're going to be back together in less than an hour.
We went 2 days without you guys. We were lost.
Did you miss us?
Lost.
We did. I actually, surprisingly, Carol, yes, I do miss you.
That actually warms my heart.
Happy Valentine's Day.
All right, happy Valentine's Day. We're going to be back, though, and we can enjoy more Valentine's Day when we do Beyond the Bell, our cross-platform coverage at 4 p.m. Wall Street time. We're going to take you through the market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I will say, being out in the West Coast, and you stayed there for a couple of days, you have some family out there, which is really cool. But I did feel like, oh my God, there were no masks. We were outside mostly. It did feel like, wait a minute, this felt much more normal. And people were talking about doing more normal things. I think people were traveling.
I think Romaine brings up a really good point, and I think it's one that you mostly see and learn about in Europe and the United States about the pushback to mandates 2 years into the pandemic. I'm really glad you brought up Michelle Cortez's article because there was a quote in there from Amish Adalja from the Johns Hopkins Center for Health Security, and I keep asking these experts, Carol, what the definition of an endemic is. At what point do you say this is no longer a pandemic, this is endemic? He had a definition in there. He said when hospitals are no longer overwhelmed.
Right.
And I think that's a really good way to think about it.
The other thing is, do definitions matter if people don't feel safe
Not for China.
They don't go to work and disrupt the supply chain? Like, that's what will keep prices elevated, not because there's something, inflationary beyond our control. I think largely we understand these supply chain disruptions. And again, until we get clean data, until we get a cleaner economy, but if this persists a lot longer, the data will be muddy.
I think the supply chain part is a really important part. The other part is school closures.
Yeah.
And if schools keep getting closed, then that means parents have to stay home, and that leads to an entirely different type of disruption.
I mean, that's real, right?
Yeah,
You're
it
home,
is.
and what does that mean? And especially if you cannot work from home easily, that's going to impact things. All right, we're going to continue our Valentine's Day discussion with our TV colleagues. We'll get back to that in just a moment.
In the meantime, let's go to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Russian President Vladimir Putin is signaling a willingness to keep talking with the U.S. about Ukraine. During a meeting with his foreign minister, Sergei Lavrov, Putin said all right to a proposal to continue a dialogue with the U.S. and its allies, even though they've rejected Moscow's main security demands. Bloomberg Washington correspondent Anne-Marie Hordern explains Putin's possible endgame.
We know that his main security concerns is redrawing the map back to 1997 when it comes to the NATO forces, and that Ukraine cannot join NATO. Now, the United States says that is off the table, but there are secondary security concerns, especially when it comes to placement of missiles, that potentially Putin can take as a win, and then he'll go home to his domestic audience and say, look, the West, what he calls, was at peak hysteria over Ukraine, and I never invaded like I said I wouldn't.
Bloomberg's Anne-Marie Hordern says today's meeting between Putin and Lavrov was solely for a Russian audience, but all eyes will be on tomorrow's meeting that Putin will hold with Germany's Chancellor Olaf Scholz. Russian skater Kamila Valieva has been cleared to compete in the women's figure skating competition at the Winter Olympics despite failing a pre-games drug test. The Court of Arbitration for Sport says the 15-year-old favorite in the women's competition does not need to be provisionally suspended ahead of a full investigation. Medals in her events, though, will not be awarded until that probe is complete. A new poll is revealing most Americans believe social media should censor itself. Polling firm Ipsos released a report saying that Americans think tech companies should be at the helm of censorship. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, back from the West Coast in our Bloomberg Interactive Brokers studio. And, well, both of us did not go to the big game.
I was going to say, were you at this party? I know you said, Carol's going to the airport. Bye, I'm flying back to New Jersey. Were you secretly going to a party with the CEO of Goldman Sachs?
I did not do that, but David Solomon of Goldman Sachs, apparently, I believe he was DJing, right, at a party?
Yeah, that's right. That's his side hustle.
Well, what's interesting is Amanda Gordon, she's such a fun read when anything, big parties are going on any of the coasts or even globally. And she's got a column out today. And she says, one of the odder artifacts passed out to members of the media at Sports Illustrated's Super Bowl party this past weekend was a face sheet filled with several pages of tiny rectangular photos of people who might be at the event.
Okay, so here's some important names and faces to know. There were some Sports Illustrated models. There were some influencers there. Then it got to the people who really mattered, the 5 performers. But there was one image among these 5 faces that was not like the others.
Right. Are we talking about David Solomon?
We are.
Okay. 4 were, as you said, the 5th looked like it could have been, as you said, pulled from a corporate annual report, all smile, suit, and tie. There was an extra note under the man's name, David Solomon.
Yeah, to our audience, he certainly needs no introduction. He didn't turn up, though, in a suit and tie. Super Bowl parties, though, they're more free-spirited than most. This was true for the guests as well as for Solomon. He's actually been hitting the DJ circuit for years now.
Yeah, exactly. Solomon didn't spend all night confronting his numerous battles at Goldman, paying huge bonuses, staying ahead of wild market swings, starting the week. No, he wasn't doing that.
No. What do you think? This is a legit side hustle.
It says instead he got to be responsible for making sure everyone had a good time in the critical 11 to midnight hour, including the super rich attending the outdoor party like Jeff Bezos, Josh Harris, who's reportedly considering a bid on the NFL's Denver Broncos. So this was a party where he was spinning records.
Yeah, did you see the faces at yesterday's Super Bowl?
Records. Yes. It was really funny. The networks made it, there was Ben and Jen. There were a lot of well-known faces out in the crowd. That's part of fun of the big game. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And good afternoon, Charlie. U.S. stocks plunged intraday again amid fresh Ukraine worries. Dow's currently down at 257 points, was down 434. S&P's dropped 26, NASDAQ paring losses to 23. The U.S. 10-year yield at 1.99%. Gold is up 14. Oil is also climbing, but Bitcoin is little changed. Among the main 11 S&P sectors, only consumer discretionary and telecom were in the green, and leaders to the upside in the Dow, Disney and Nike, while Walgreens and IBM led to the downside. In deal news, Peloton dropped as much as 7%. The FT reported the CEO's plan does not include a sale, and in others, WTI crude futures hit 95 for the first time since 2014. Wrapping things up, Arista Networks reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
All right, Charlie, thanks. Well, on Friday, Bloomberg Live hosting its Power Players Summit. Tim and I were there. It's bringing together folks in the sports world. And at the event, I caught up with Jimmy Pitaro, chairman at ESPN and sports content of the Disney company. Also, George Pine, founder and CEO of Bruin Capital. Talk about meeting sports fans wherever they are, and that included the gambling world and social media.
Jimmy, does what you do on social ultimately drive to other platforms? Maybe people get a snippet of something and then they ultimately want to see more?
That's exactly the strategy. So I was,
and it works?
Yes, it does work. I will tell you that this is just one little anecdote, but I was speaking at a conference, a sales conference, and we were having this exact discussion. And afterwards, an executive came up to me and said, I just want you to know I have two teenagers, and they were both introduced to ESPN on Snap. And now they're watching First Take and Get Up on traditional television. So for me, that's the strategy. You know, we, of course, want to be there, and we'll continue to be there on those platforms, but it's a way to grow awareness. So it's a way to grow affinity and get this younger generation just generally excited about ESPN.
Go ahead.
And the other thing that's interesting now is gambling.
Well, that's
in sports, right? I mean, 31 million people are supposed to bet on the game Sunday. $8 billion will be wagered legally, by the way, up 78%. We have a company called Odds Checker that it's kind of a kayak for betting. In the UK, we're bringing it to America. And in the first 3 days of New York being live, we did 15% of the budgeted revenue for the year. So obviously, we budgeted it too low. But the gambling is sticky as well. So when you think about gambling, social media, digital media, understanding what people want, you know, the world's changing around us.
How does gambling turn into somebody who ultimately goes to ESPN? Does it work? I mean,
well, look. So here's what
you guys have.
We're in it. We are in the space. We've been in the space for several years.
Bob Chapek of Disney actually said this week he's bullish on sports, including betting.
He is. He's bullish on both. I will tell you, we've been in the space. We have content. We have dedicated segments on SportsCenter. Scott Van Pelt has his SportsCenter where he does a segment called Bad Beats. We have dedicated podcasts. We have a dedicated area on ESPN.com. We have a ESPN branded studio in Vegas on the Strip that generates betting specific programming on a regular basis. We've done the research, and of course we were treading carefully here over the past few years, still investing, but really looking closely at the data. And what we saw is that, number one, our fans are no longer just okay with it, they're demanding it. They expect ESPN to be offering this betting experience within our environment.
Right.
Number two, and this is really interesting, we didn't see any negative impact on the Disney brand. I mean, for those of you that don't know, the Walt Disney Company owns ESPN, so we wanted to be careful in that regard too. And what we're seeing is it was neutral to positive even on the Disney brand.
Which is surprising because I think people thought family brand, how could you get into betting?
Well, you see all the leagues now, all the major leagues. In fact, every league is.
You're 19 times more likely to watch a sporting event if you make a bet. So if I'm a broadcaster of sports, how can I not do it? Like, if they don't do it, everybody else will. They'll be at a disadvantage. ESPN really doesn't. I can say it.
No, it's all right.
You don't have a choice. They have to. They have, like he said, he has to be where the fans are, and he has to give the fans what they want.
Yeah, we're in a battle. We're in a battle for people's time. We're not just competing against the traditional sports media companies. We all know this. We're competing against Instagram and Snap and Fortnite and Netflix. And so we have to be aggressive here. Now, that being said, my job is to protect the brand at all costs. And if I saw any data that indicated to me that this was a dangerous position to be taking, we wouldn't do it.
Right.
Even if there was financial upside, we wouldn't do it. I have to protect the brand. But we're just not seeing that.
Any worries about the integrity of sports in general, especially as we know it's teams getting in, right? The league's getting in. I mean, everybody is really kind of all in when it comes to betting and gambling.
Well, around the world, they've been doing it for a long time without really any issue. I mean, there's always an issue of integrity, but I would argue you had that whether it was legal or illegal. I mean, one of the things we're finding is that legal betting's way up. Makes sense. I'd rather make a legal bet than an illegal bet, right? So if I now have the choice to make a legal bet, it's probably better. But no, I don't think there's any evidence that it's been a real issue. I mean, in Europe, they've been betting for quite a long time.
Yeah, and look, somewhat connected to that, one of the things that we bring to the table, I think, is our brand, which represents trust, a certain level of credibility. So anyway, we see opportunity here, but of course, we're going to do it responsibly.
Right, and just tread carefully and go slowly.
One of the things you see, the leagues, which I think is really smart to that point, is talking about doing advertising, the NFL, about responsible gaming. I think that's one of the learnings that wasn't done well around the world. And you see some of the countries increasing regulation, and I think the leagues here in the U.S. are trying to get ahead of it by initially do this responsibly.
All right, that, of course, was Jimmy Pitaro. He's chairman of ESPN and sports content for the Walt Disney Company, George Pine, founder and CEO of Bruin Capital, who has 3 generations in his family who have been involved in the NFL. So really cool individuals to talk about what's going on.
Not the first time I've heard that engagement metric about the likelihood of you actually watching an event. It goes up significantly if you end up betting on it. And of course the leagues are going to want to get involved, but how do you keep it pure, Carol?
Integrity, right? Integrity of the game.
Signs in locker rooms? Is that enough?
I
Videos, trainings?
I don't know. I don't know. When I think of Brian Flores, the former Miami coach, head coach, his lawsuit, and part of the concerns, or at least claims or allegations, were that the owner, was offering money for him to lose games, right, to improve their position in the draft. But so you just
Pete Rose.
I don't know what to say, but everybody is all in when it comes to gaming, and these guys just talking about wanting to be wherever the fans are. Truly, it means multiple platforms. Check out more. Go to BloombergLive.com.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Are you bored of me talking about high gasoline prices in California yet?
No. Were they high?
They were really high. Oh, yeah, it was remarkable driving around. I thought it was just an LA thing, and I was driving around LA.
Like how high were they? About
$5 a gallon.
Wow.
And then I got up to
I
San
didn't
Luis
see that.
Obispo, where my parents live, drove up there, and, $4.79, $4.99, $5.19 a gallon.
That's
regularly.
Pretty steep.
Yeah.
All right. Well, and Americans definitely feeling that. All right. We're going to talk a little bit about gasoline and energy prices. We'll do that in just a moment. We've got Crude coming up with our chart of the day.
In the meantime, though, less than a half hour until the markets close here on this Monday afternoon. Here's an update from Charlie Pellet.
Hi, thank you very much. Let's begin with crude, highest since 2014, 95, did hit $95 a barrel, trading very close to that, talking about West Texas Intermediate crude right now, 94.94 on WTI, up $1.84, up by 2%. Brent, 95.96, was right around 96 a few minutes ago, up by 1.6%. Natural gas, also a big story today, surging by 5.8%, 416 per million BTUs. So certainly seeing a rally in the energy group today. 0.2%. S&P down 14, drop right now of 0.3%, and the Dow Jones Industrial Average down 176, lower by 0.5%. Volatile day. Traders are assessing the latest geopolitical developments amid worries about a Federal Reserve policy make. Investors, as I mentioned, also keeping an eye on crude oil. We've got more on that topic coming up in just a moment, right here on Bloomberg Business Week. Again, that 10-year yield, 1.98%. Spot gold's up $13 the ounce, now up 7 tenths, $18.71 the ounce, and Bitcoin, little change, 42,239 on Bitcoin. Only 3% of white-collar workers want to get back to the office 5 days a week, according to a poll by management consultancy Advanced Workplace Associates, which warned employees will quit if bosses force them back full-time. Across the United States, coronavirus cases are little changed. Dr. Joshua Sharfstein is Vice Dean of Johns Hopkins Bloomberg School of Public Health, and he told us this morning there's no question that there is light at the end of the tunnel.
We're seeing that countries that are very highly vaccinated have been able to withstand the Omicron wave without nearly as many deaths as we've had. We're building, obviously, between the vaccines and infections, a lot of immunity. So I do think that we will get there, and we just have to, watch the indices and take smart steps along the way.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track every day at the same time. Pfizer down 2.2%. BioNTech, its German partner, the ADR is down 8.7%. AstraZeneca's ADR is down 0.9%. Moderna shares, they are down now by 11.3%. J&J, Johnson & Johnson, right now lower by 1.4%. Recapping, NASDAQ higher by 0.3%. S&P down 0.2. 10-year yield 1.98%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every time at this time, on this day at this time, we turn to Crude Gupta. She's markets correspondent for Bloomberg. She joins us on the phone from New York City. She's got her chart of the day. If you want to see that chart of the day that we talk about each and every day at this time, send an email to Crude at kgupta129@bloomberg.net. You can also check out her profiles on Twitter and Instagram. Do that at Crude Gupta News. Crude, we are talking about road trips. I texted you. I took this picture of high gas prices in California, and I texted it to Crude today when I saw this chart because I can't get past it. It's they're going up.
Yeah, it's wild. And you were in California over the weekend. You both were. And I think what's fascinating is that the highest prices in the country, including Alaska and Hawaii, which Hawaii is kind of known for higher prices in general because they're an island, it costs extra to ship, et cetera. It's actually California that's the most expensive. There's certain counties there that have seen prices as high as $7. They've, of course, been their kind of own issues. But, Yeah, it's fascinating to me because gas prices continue to rise and rise and rise. And it's only February. It's not even driving season yet. So imagine what happens this summer when everyone gets on the road and decides to take a road trip.
Creedy, we were just in LA. It's always driving season in LA. Okay.
It was like,
well, when the rest of the country catches up.
It'd be like a trip around the corner and be like 20 minutes.
And you have to drive. You can't walk.
You can't walk because there's no mass transportation.
Listen to these New Yorkers here.
It was because you and I would be like, can we walk there? And that would be a no. All right. So I do think about, as we continue to track inflation and CPI and PPI, I mean, these higher prices are certainly going to play up in those numbers.
Yeah, they absolutely are. And to me, I think what's most important about this is how does it change your behavior? Because at the end of the day, if you're paying more for gas, are you going to be buying as many clothes? Are you going to be taking as many trips? Are you going to maybe rethink that road trip this summer? Or even simple things, right? Like how often are you going to fuel up? Are you going to fill up the tank completely? Or are you only going to kind of fill it up halfway? Are you going to commute to work? Or are you going to remote to work more often? These are the kind of questions that I think a lot of people are going to be asking. And it's going to show up in the data as people decide to maybe cut back a little bit and say, you know, we're gonna save a little bit. We're not going to take as many trips to the movies or the grocery stores or whatever. And obviously that's going to show up in the data when you do see these reports.
Hey, Creedy, very briefly, are higher wages offsetting these higher gas prices?
They are and they're not, because think about who's getting those higher wages. I love to look at real wages because it's kind of inflation adjusted. And right now, if you actually look at the income brackets, it's the bottommost income bracket, the lower income brackets, the laborers that work mostly on kind of hourly salaries that are actually seeing real wages increase, which means they're actually getting raises when you kind of adjust for inflation. This is also the group that's most affected by these increases in gasoline prices and kind of lives paycheck to paycheck. So for them, this is going to be extra dangerous, but because they're making more relatively, it'll offset it. For the rest of the country, for the other income brackets, not so much. This is still going to be an issue for them.
And, you know, while I think it's not one of the main ingredients in jet fuel, it's certainly a component of, and it'll play into also the cost for traveling. Just as people are thinking about traveling again, if those are higher costs in that ticket as well, does that stop them from doing it?
You know what's not a component in jet fuel?
What's that?
Avocados.
Solid transition.
Thank you,
That was
Creedy.
well done.
Thank you. Each and every day you send us this story that you've got your eye on. I'm glad you sent us this one, this avocado spat that's been brewing after the U.S. inspector is threatened in Mexico. What's going on with 80% of the avocados we get here in the U.S.?
Yeah, well, all it takes is one little spat, right? And then you do start to see these avocado prices kind of rally. So basically what happened is the U.S. kind of shut down imports of avocados from Mexico's biggest producing region because one of its inspectors received a threatening phone call. Now, some of the kind of details are a little bit unclear. Who made the threat? What was the threat? But what we do know is that it was significant enough for them to kind of just put the halt on these avocados. And because classic demand supply, when you have fewer supply and this kind of skyrocketing demand, especially ahead of the Super Bowl, what happens is you do have this increase in avocado prices.
I was thinking about, there's a commercial, was it a Chipotle commercial? And like how many avocados they use to make a batch of guac, and I think it's something like 60 avocados. It's a lot. I was thinking about, this is going to get expensive. It already is. They're passing along higher prices.
Thank you so much.
They have.
Creedy Gupta. Check out her chart of the day. You can do that by sending her an email, creedygupta129@bloomberg.net. Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons. Hey, Nance.
Thanks, Tim. The U.S. does not believe Russian President Vladimir Putin has made a decision yet on whether to invade Ukraine. He told his foreign minister today to keep talking with the West. But the Pentagon's John Kirby says there's no sign that Putin has withdrawn his forces from the Ukraine border. In fact, he says he continues to add more.
Mr. Putin has added military capability along that border with Ukraine and in Belarus. He is exercising some of his units on the ground there in the south, as well as naval units in the Black Sea. So he continues to add to his readiness. He continues to give himself more options should he pursue a military path here.
Kirby says Defense Secretary Lloyd Austin will travel to Belgium, Poland, and Lithuania to show the U.S. support for our allies. A rise in unruly passengers in the air now has the nation's largest airlines working on a national no-fly list.
Sources tell Bloomberg News the talks have intensified over the last 6 months between the carriers and the Biden administration, and the airline unions have also been involved in talks to create this no-fly list. The Federal Aviation Administration says it dealt with nearly 6,000 reports of passenger misconduct last year, nearly 3 in 4 of them related to masking in the air. The FAA launched investigations into about 1,100 serious incidents. That's more than 3 times the previous high. In Washington, I'm Nathan Hager, Bloomberg Radio.
A federal judge says he'll rule against former Alaska Governor Sarah Palin in her defamation suit against the New York Times, saying she's failed to present enough evidence to prove her case. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. This story among the most read on the Bloomberg terminal, and in fact, it's a Bloomberg exclusive.
Yeah, HSBC is to double some junior banker bonuses in that race for talent. The company is planning to double bonuses for this investment bankers and traders as well. This in a bid to catch up with rivals when it comes to compensation.
Yeah, the lender, which paid less than most rivals a year ago after cutting the bonus pool at its global banking and markets division by 15%, now wants to avoid losing those junior staff to Wall Street firms who have been consistently raising pay. This according to people familiar with the matter. More senior employees are said to be in line for a 2021 bonus hike of at least 10%, according to those in the know, declining, of course, to be identified as the details, often private.
Inflation's at 7.5%, so 10%.
So beating inflation by a little bit.
By a little bit.
By a little bit. Yeah.
No, we're not talking like other, we're not talking like what we saw executives at some of the big banks.
Right, or even in Amazon, like different people,
Yeah,
right? If you think about
point.
it's been spreading out. It's not just the financial community.
Well, speaking in an interview with Bloomberg last month, Greg Guyett, the co-head of Global Banking and Markets Division, said that HSBC was feeling the industry-wide, quote, upward pressure on pay. Here's what he said, quote, "We've got to keep pay up across the board competitive."
Yeah, it's interesting. This is what's going on. It's definitely a talent war. And, when you think about certainly those investment bankers, junior or otherwise, or senior, that have been developing relationships, I mean, this translates into dollars, certainly for firms. And we have seen a record, last year was a record M&A year. We're already seeing a lot of record flow. And so you are all, looking at these firms and how do you hold on to these individuals?
Goldman Sachs thinks that one way to do that, among these other firms as well, is to pay employees more. Goldman spent an average of 23% more per employee last year. That's the biggest jump, Carol, in more than a decade.
That's pretty substantial. HSBC, by the way, due to report its full-year earnings next week. The bank is in the midst of a strategic overhaul designed to pivot its businesses increasingly towards Asia, but expect them to probably get questions about the costs equation, especially when it comes to compensation and bonuses. You're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all on the minus side right now. It has been a volatile day. Traders are assessing the latest geopolitical developments amid worries about a Federal Reserve policy mistake. Traders also keeping an eye on crude oil. West Texas Intermediate very close to $95 a barrel. Did trade above that for the first time since 2014. 94.94 right now on WTI. It is up by 2%. Brent crude, 95.97 a barrel. Saw a couple of prints above $96 there, up 1.6%. Spot gold up 0.7, 18.72 the ounce. Bitcoin, little changed, up right now at 42,274 on Bitcoin. 10-year yield, 1.99%. The Dow is down 104, well off session lows, down 0.3%. S&P down 8, drop right now of 0.2%. NASDAQ reversing course, back in the green. It has been that kind of a day. NASDAQ now up by 22 points, a gain there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Many issues before Congress are complicated. Here's one it isn't. Lawmakers shouldn't be allowed to trade individual stocks while in office. The opportunities for abuse are too plentiful, and disclosure requirements alone aren't enough to prevent serious misconduct. Precisely what new rules to establish is a matter of debate. Several competing proposals have been circulating in Congress. But at a minimum, lawmakers and their immediate families should be required to place their investment assets into a blind trust for the duration of their time in office. Imposing a blanket ban on holding equities would be even better. Passing such a bill would remove a constant temptation for lawmakers and prevent obvious conflicts of interest. Importantly, it would also help convince the American public that their elected officials are more interested in doing good than doing well. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session, getting ready to wrap up this Valentine's Day of trading. Not a lot of love on Wall Street. In fact, it's a pretty volatile relationship.
I like what you did there, Carol.
Thank you.
Have you been waiting a year to say that?
I have indeed.
What would have happened if stocks were in the green today?
This is what happens when you get no sleep. Yeah, exactly. All right, let's get to it with Michael Sheldon. He's Executive Director and Chief Investment Officer at Hightower RDM Financial Group, based in Westport, Connecticut. And that's where we find him on the phone on this Monday. Michael, how are you?
Good. Thanks very much, and happy Valentine's Day to everyone and our viewers, listeners.
Yeah, no, absolutely. It's been a wacky day. I was just looking at some of the swings in the major averages, like 2% on the NASDAQ 100, about 1.5% on the S&P 500. How do you make sense of a day like today when we're watching the tensions, the geopolitical concerns involving Russia and Ukraine and the rest of the world, but we're also got some nervousness about how aggressive the Fed may be?
Yeah, I think for the markets, unfortunately, we're probably going to be in this sort of trading range, and markets are likely to remain unsettled for the near term until we have more clarity on the outlook for inflation, shifting Fed policy, and more recently, the situation in Russia and the Ukraine.
What do you make of the situation in Russia and Ukraine? Because we had Christina Hooper from Invesco on Quick Take Stock earlier today, and she mentioned that oftentimes geopolitical shocks like this are relatively short-lived in terms of effects to the markets, but she said this one could be different because of the impact on oil.
Yeah, I think it's certainly a wild card. It's really tough to figure out what Putin's intentions are at this point. He could just be trying to cement his legacy as a dictator or leader of Russia. You know, we look back also at a number of geopolitical events going back as far back as 1941. We looked at about 25 of these, and granted, each one is different. But what it showed is that on average, the S&P 500 fell about 1.1% on the day of a geopolitical event, and it fell a total of about 5%, almost 5% over the next 20 days, but eventually recovered its losses over the next 43 days. So most of these events have been fairly limited with the market rebounding. And of course, each period is different. Russia is a pretty big player here. I think they supply about 10% of the world's oil, and they also supply about 1/3 of Europe's natural gas. So the implications of what happens certainly could be far-reaching, probably more so for Europe than for the U.S.
What's more problematic, the geopolitical concerns, the reminder that the pandemic is far from over and it's a global pandemic, and until the world is out of it, none of us are out of it? Or is it that fundamentally, as our Gina Martin Adams reminded us, that we are seeing analysts bring down their expectations for earnings, but yet we're still looking for 9% revenue growth, which, as she said, still fantastic. What is the thing investors really need to be focusing on?
Well, you left one thing off your list, which is the Fed.
Yeah,
and I think at the top of the list is the Fed.
Okay.
Right now, I think that because of concerns about the level and stickiness of inflation, that's put pressure on the Fed to finally start raising interest rates. And a short term after that, they're likely to start QT. So I think there's a lot of uncertainty about the pace and timing and ultimate destination of what's going to happen to short-term rates. And I think, importantly, the Fed's aware that the yield curve is narrowing. That's the gap between 2-year and 10-year yields. So the yield curve is narrowing. I think the Michigan Consumer Confidence Index, for example, which came out last week, fell to an 11-year low. And I think Fed members are aware of the fact that if there are too many aggressive rate hikes, that can actually harm the economy. But they are also aware that inflation is at a 40-year high. So I think they have to address the inflation part, but I think they're probably going to start off with quarter-point hikes and see how things go, and and continue to have some flexibility as we go through the year.
So do you anticipate a quarter-point hike in March and then a quarter-point hike at each subsequent meeting?
Well, we have 7 more rate meetings this year, so I think a quarter point in March. I think not enough Fed officials have signaled their likelihood or their need for, they're wanting to do 50 basis points. So I think that's a little too aggressive at the first meeting. That could change, but I think a quarter point in March, probably a quarter point in May, a quarter point in June, that's 75 basis points. And I wouldn't be surprised to see 1 or 2 more in the second half of the year. But again, I do think the economy could change as we shift and go through the year. So nothing is written in stone, but the Fed does have to start taking action. And I think they also definitely have to address their balance sheet, which increased from about $4 trillion to $9 trillion. So I would expect that to start running off as well as we get into the summer.
So what do we do as an investor as we watch, especially markets kind of bounce back and forth? I mean, we went through a day earlier where travel stocks were rallying as a whole on expectations of easing of the tensions over in Russia and Ukraine, and then we saw them sell off, and then they're just bouncing around. It's really, your day may start one way, Michael, and then end another, or go through several gyrations in, one market day.
Yeah, it's a challenging time to be an investor, for sure. We think this year, in 2022, markets are likely to be rotational in nature, and sort of a lot like we saw last year, where at some point people will be worried about too much inflation, as they are today, but down the road they may be worried about not enough growth. So I think between growth and value, I think you want to have a balance between both growth and value, especially with interest rates rising right now. We've been very much overweight growth over the past decade or so, and it's turned out pretty well in terms of a tailwind for portfolios. But on the margin, we're starting to shift a little bit more to the middle between growth and value. And I think you want to have a little more balance in your portfolios as we go through this year.
So what does that look like? What does balance look like?
So balance means you want to have some technology in your portfolios because there are some exciting areas in artificial intelligence and 5G and driverless cars and all those types of things. So you want to have that, and that provides the growth that investors need to meet their long-term investment objectives. But you also need to have some exposure to areas like healthcare, for example, which we call sort of like GARPy, or growth at a reasonable price, and then some energy and financial exposure as well. So the one areas we're not sort of loading up on right now are consumer staples and utilities, because we think it's kind of too early in the cycle to get ultra defensive at this point, and there's not a lot of attractive growth in those sectors.
All right, we got to run. Hey, Michael, thank you so much. Have a good week. Michael Sheldon, he's Executive Director and Chief Investment Officer at Hightower RDM Financial Group, based in Westport, Connecticut, which is where we found him on the phone on this Valentine's Day Monday. We are bouncing around, folks, up, down, up, down. We're off our lows again, but still down about 1/3 of 1% on the S&P 500. Dow Jones Industrial Average down 0.4%, and the NASDAQ now pretty much flat, unchanged on the day.
Yeah, NASDAQ kind of the star of the show today, thanks to Amazon, Tesla, Google, NVIDIA, and more.
Bouncing around though, and depending on when you look at the market day, you see a different trade. You could really kind of divide it up into different segments. All right, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the closing bell on this Monday. As we mentioned, lots of volatility, but we'll walk you through the sectors that have been on the move on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Caroline Hyde, back from the barbecue, counting down to the closing bell, and here to help take us beyond the bell. It's our global simulcast partners, Carol Masser and Tim Stenovic, back from the Super Bowl, bringing together our Bloomberg television, radio, and YouTube audiences to parse what is an interesting day here. Another seesaw back and forth, Carol, as a lot of folks try to price in what they think is going to happen.
Well, after the big game where there was a definitive winner by the end of the Super Bowl, today, you've had winners and losers, the same names, just going back and forth. And you've had quite a swing, about 2% on the NASDAQ 100 in particular. But all of those major equity averages, Tim, really moving around.
Yeah, way to rub it in for us Bengals fans, Carol. Don't appreciate that. Hey, the NASDAQ composite, though, that's certainly the star of the show today, thanks to mega cap tech companies like Amazon, Tesla, NVIDIA, Google, looking like it could actually, finish the day higher, despite the fact that S&P 500, third day in a row lower.
Bengals fan?
Tim,
yeah. My wife is from Cincinnati.
Oh.
Yeah, so
that makes sense.
we have to have a unified front. Okay.
By default.
Yeah.
Unified front.
She's the big football fan in the house.
Is there a lot? What do you guys do in Cincinnati? You put like the chili on top of
exactly. Yeah, Cincinnati chili, 3-way, 4-way, 5-way.
4-way, 5-way. Is that all you eat all day?
Yeah, we actually have some at home from last night.
And tomorrow
We'll send you the
night.
recipe.
I think many people are kind of going long chips and dips for the rest of the week, it would feel like. But notably, we are seeing tumult within the markets. We're seeing commodity prices once again push higher. Avocado prices. Did you see that spat between Mexico and the U.S.? I'm worried about my guacamole, but I'm also worried about my
guacamole on Friday, Caroline. Avocados are so expensive, they're substituting it with broccoli, and it's called brockamole.
I can imagine you like that.
It's weird.
All right, well, look at this, folks. We're getting the closing bells here in New York on this Monday afternoon. Remember, we had a pretty massive sell-off on Friday. We have a slight sell-off today, not nearly as bad, but again, the sentiment is certainly to the downside. The Dow Jones Industrial Average going to close down by about 0.5%. The S&P 500 down by about 0.4% here. We're going to call the NASDAQ basically unchanged right now, still waiting for these numbers to settle. It looks like the composite's going to end the day basically either in the red or unchanged. The NASDAQ 100 going to be up slightly by about 0.1%, and the Russell 2000 down about 0.5% here on the day, Carol.
All right, and as I mentioned, we did see the Russell also quite a swing as well, about a 1% swing in that average as well.
Carol, we take a look, as we always do for our radio audience, at the sectors, winners and losers. I know that actually we're waiting earnings results, quarterly results here from Avis Budget Group. That is the ticker CAR. Interesting, the CAR and some of the auto components were the best performers on the day. You're up about 0.8%. It's transportation and retailers as well. There was some technology sprinkled up in there as well, as you get a little bit of defensiveness, but otherwise everything was pretty much red on the screen as well. Carol, if you take a look at where we are, it's pretty much banks, it's food and staples, and of course it really was energy that's off 2.5%, as the energy stocks are lagging some of the big gains that we've seen within the oil market.
All right, just want to mention a headline crossing the Bloomberg. Talks between Monster Beverage, of course, the maker of those big energy drinks, and Corona brewer, Constellation Brands, about a combination are progressing according to people familiar with the matter. So this is just another theme that we've been seeing in 2022. How long?
Since November.
Isn't that a
I feel like they've been talking for a while, right?
And everyone was completely flummoxed by it when it first broke.
Yeah, okay. Well, they're moving closer. I think it was a Bloomberg scoop when we first reported this a few months ago.
Yeah, and
it's still going on.
they're saying an agreement could be reached in the coming weeks if negotiations proceed smoothly.
This would be a big deal. I mean, as a monster, like a 40-something billion company.
I think they're about the same size, aren't they?
Yeah.
Yeah, and
Will they do more
Coca-Cola.
beer seltzer?
Coca-Cola is a major shareholder in Monster, so yeah, it would be a pretty big tie-up. And just a reminder of all the M&A activity that continues to happen this year, coming off a hot year last year.
Do you think the FTC would block this one? They've blocked. I mean,
There's
two deals right now.
so
have
many
basically been
choices
scuttled.
of
That
what to
Lockheed deal,
drink.
which I thought that was kind of weird. And then you had, of course, all the concerns about NVIDIA, ARM, and whatever's going on with Lena
Competition, you need it.
Yeah.
Caroline, we were having just quickly an interesting conversation about the video game makers and, of course, in Microsoft. So there has been sort of this push. We talk about the bark being more than the bite with this administration, this FTC. Still, people are going ahead. Corporations are going ahead with some plans, at least while they can.
Well, the big question is the consumer hurt? And I would say, going back to the beverage market, I mean, there's so many different choices out there. So unless there's a real tie-up of one particular vertical, I guess you could say that the deal would go through. Although it's not a deal yet, so we'll wait. Let's get to some of the gainers today. Splunk is certainly a standout. I think, Romain, you mentioned it earlier, finishing near its highs, up about 9%. Wall Street Journal out with a report on Friday saying that Cisco Systems made a takeover offer. Bloomberg has reported that talks between the two companies have ended. We'll see what happens. Wall Street Journal is saying it would be a $20 billion offer, but we're waiting to hear more on that definitively. Expedia, travel companies were on the move in a big way today, although we certainly saw them move off their highs. Expedia, they're holding on to about a 2.6% gain, top in the S&P 500. We have seen analysts raising their price target following earnings last week. And then just did want to mention Coinbase. It was up about 4.6%, still up about 0.4% by the end of the close. A lot of social media buzz following its ad during the Super Bowl.
All right, well, let's talk decliners. Taking the bottom, at least on a percentage basis, of the S&P 500 today is Moderna. Shares down 71% from those August highs. The stock continuing to move lower. You guys, we talked about avocados. It was perfect timing because Mission Produce, it is the biggest distributor of the avocados in the United States. You mentioned the U.S. shutting down imports of avocados from Mexico's biggest producing region because one of its inspectors received a threatening phone call. Shares of Mission Produce finishing down 3.3%. They're going to try to get avocados from other parts of the world, but that could be tough. Yeah.
Did you see that Super Bowl commercial for avocados?
I did. I saw that.
From Mexico.
Not great timing.
Yeah, not great timing.
Yeah.
I thought it was entertaining. I thought most of the commercials were entertaining. What do you think of the E-Trade baby coming back?
I loved it.
Blast from the past, right?
And he's like, what?
Is that a sign of the times?
They're buying stocks off memes?
Yeah.
Get my onesie. That's gold.
How come they didn't hire you for that one? I like that. I like that, Romain. And then we're talking oil.
Now, were you guys partying at the Super Bowl? Like, did you go to the after parties? What happened?
We didn't stay for the big game.
No? Your boss didn't let you go? No?
No.
Oh, okay. I'll talk to him.
Yeah, you work on that. You work on that.
He's always out for the team. He missed you guys, and he wanted to see you having fun at the Super Bowl. Meanwhile, I mean, we are instead all focused on what's happening with geopolitics today. We move aside from the politics on the turf, and we see the politics that's happening, of course, between what's happening with Russia and Ukraine. We seek out the havens, particularly in the world of FX. The dollar rises, the euro having a poor day, off by 0.5%. You're seeing some of those commodity-related currency pairs, the New Zealand dollar off by 0.5%. We also see the British pound off by 0.3%. So you see money moving into the havens like the yen, the US dollar. We see money moving into concerns around commodities. Oil gets a bit upwards, more than 2%, as we perhaps misread some messaging coming from the leader of Ukraine. We're up to $94.99. Now remember, for the first time we got to that 2014 level of $95 on WTI. We're seeing Brent crude at $96 as we stand. Metals fall as the dollar goes strong. And we see sovereign bonds, actually a mixed picture across the board. Yields pushing higher in Canada on the 5-year basis. And indeed, we're seeing UK, the gilts there, push up in the 2-year by almost 10 basis points, Taylor.
And Caroline, that was a very similar story that we saw here in the U.S. And Carol, this is where I really want to kick things off, because at least the front end of the curve is still really where so much of that focus is. You're up 8 basis points on the day to a 158, 6 basis points to just shy of 2% on the 10-year yield, a 199. But you're getting still an inverted, I believe, a 7s 10. We still have an inverted 20s 30s, a very flat 2s 10s at just 41 basis points. And this really does bring into focus, yields are almost back to where we were pre-Friday before all of the geopolitical risk news came out, which shows that maybe investors are shrugging that off and refocusing on the big PPI data, the big retail sales data, and the big Fed announcements to come really in the next 4 to 5 weeks.
Well, this is what's interesting, going back to the Mary Daly Sot that we aired earlier. I mean, how much will Jay Powell and the FOMC, continue to kind of beat the table that we are data dependent? Do they go back to that? And do they really follow data to data point, or do they follow what the markets are saying and watching yields kind of move higher, all along the yield curve?
Yeah, and I think the data has spoken. I mean, we should point out we're going to get those minutes from the last meeting on Wednesday, which will be interesting to see if we get a little more clarity as to just what type of urgency they really felt to do something, and maybe that gives us a better read as to what they do on March 16th. I do think, though, when you look at the data here, Carol and Tim, I mean, the data has basically said that it's time for them to move. I don't think that's pretty much unambiguous at this point. The question is how severe that move or how aggressive that move will be.
Right. If you think about the Fed's dual mandate, right, stable prices and maximum employment, well, prices are not stable right now because inflation is at 7.5%. But it seems like we're at maximum employment, at least how we're measuring it right now. I know there are a lot of people who still aren't back in the labor force, but, about a 4.4% unemployment rate, that's a pretty strong labor market.
It's interesting that ECB over in Europe, you heard Madame Lagarde sort of pulling back a little bit from the hawkish comments we got at the previous ECB meeting, sort of talking about the fact that they still need to move gradually at the right time. And of course, a lot of this is to do with commodity-related inflation, particularly over in Europe. And that all comes back to the geopolitical story that we've been talking about all day.
And I would just say data dependent in terms of how aggressive the Fed is. We all know that they're going to start moving rates, but is it going to be a quarter point? Is it going to be 50 or something more? And then what do they do with the balance sheet? So that's where the data plays into how fast they move and how aggressively. All right, that's going to do it for our cross-platform coverage Beyond the Bell on radio, TV, and YouTube. We will see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
There it is.
Yeah.
Thinking about a lot. We had Avis Budget Group report after the bell, and shares are surging because the company beat on net revenue, $2.57 billion, beating estimates of $2.29 billion. Adjusted EPS, bottom line, also beating $7.08 versus estimates of $6.07.
Well, just like the regular trade, though, they're bouncing around. I think they're now a little change. We saw them initially, I think, had a little bit down, and then they rallied. Now they're down about 1%, but they're bouncing around. So I think investors are really trying to make sense, really, of what it means in terms of those results. So we'll continue to, but I just feel like that's the environment where we are, where investors aren't quite sure how to read stuff.
Yeah, that is absolutely true. And we're going to continue to hear from more companies. In the meantime, a check of the trading day here is, World and National News. Excuse me, Nancy Lyons.
That's
hey, Nancy.
okay. Thanks, Tim. The Pentagon says Russia is still boosting its military presence on the border with Ukraine. Spokesman John Kirby told reporters an invasion could happen at any time with little or no warning.
He continues to do the things that you would expect one to do if one was planning on a major military action, and that is to sharpen the readiness and to add to the capabilities of his force.
Kirby says the U.S. does not believe Russian President Vladimir Putin has made a decision yet. Bloomberg's Maria Tadeo is in Brussels and says it could all hinge on a meeting that Putin holds tomorrow with German Chancellor Olaf Scholz.
Everything about this meeting is important. The mannerism, the language they use, their personal rapport going into this. But of course, any hints that this time Olaf Scholz will be willing to go beyond previous sanctions from Germany to Russia, saying that perhaps this time Nord Stream 2 will be on the table. So this is a very, very important meeting that will happen tomorrow in Moscow.
Bloomberg's Maria Tadeo. The Senate is back at work this week considering bills to save the Postal Service and fund the federal government.
Senators have until Friday to pass a continuing resolution to fund the federal government. The stopgap measure would last until March 11th, while lawmakers continue working on an omnibus spending bill for the rest of the year. The Senate might also consider the Postal Service overhaul, which would save $50 billion over 10 years. The House sent the wrong version to the Senate without amendments, so the Senate would have to send it back to the House first to be updated. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Tim Stanovic along with Carol Masser. And I want to do this story. It's in our Bloomberg Opinion, from our Bloomberg Opinion group, Adrian Wooldridge, who's been on our air, and it's among the most read. And the title of it is The 4 Secrets of How to Be a Bad Boss, a few tips on how to immiserate your employees, destabilize your organization, and generally make the world a worse place. It's an opinion piece.
It is an opinion piece. This is okay. So here's what Adrian writes. The other day, I was sorting my bookshelves while listening to yet another news broadcast about Boris Johnson's imploding premiership when I came across a slim volume on, quote, How to Be a Bad Emperor, a selection of Suetonius's Lives of the Caesars, repurposed by Princeton University Press as a self-help book, or rather, as an anti-self-help book.
All right, so that's where he's coming from. So what would a modern version of How to Be a Bad Emperor look like? Here are 4 rules on how to be a bad boss in today's political and corporate world. Number 1, run your organization like a court.
Okay, so asked what he wanted to do when he grew up, the 5-year-old Boris Johnson declared that he wanted to be, quote, king of the world. His current problems all stem from his predilection to run Downing Street like a court rather than an executive office. We should remind our listeners that this, again, the opinion of Adrian Wooldridge.
Okay, number 2, untether yourself from reality. The more successful business people become, the more they abandon, quote, the reality-based community for a parallel world of their own making, surrounding themselves with toadies and yes men, socializing exclusively with people like themselves, and succumbing to weird fantasies and obsessions. Brad Stone, author of a book on Jeff Bezos, put it nicely in an interview with the New York Times. The world's richest man, quote, doesn't really live among us anymore. Again, an opinion piece, but just putting this out there.
Okay, succumb to the latest management fad. The 1990s was the high watermark of management fads, when great fad factories from business schools to consultancies to business publishers produced that never-ending cycle of fads that told companies first they had to focus on quality, TQM, and then that they had to sack half their workers, i.e. re-engineering.
All right, and the last one, just quickly, drink the Silicon Valley Kool-Aid. Jim Jones' People Temple cult was based in San Francisco before its devotees moved to Guyana and committed a collective suicide. A tragic story. We'll let you go to Bloomberg and finish reading this. But anyway, again, among the most read.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet, developing story after hours. Two beverage industry giants could be getting together. Sources tell Bloomberg talks between Monster Beverage, the maker of energy drinks, and Corona brewer Constellation Brands about a combination are progressing. Those sources say an agreement could be reached in coming weeks if negotiations proceed smoothly. The similarly sized companies do have a combined market cap of about $90 billion. So again, talks underway, said to be underway according to our sources, between Monster Beverage and Corona brewer Constellation Brands. And an update on COVID from California. California's health secretary just delivering an update saying California's modeling shows a steep COVID hospitalization decline. Indeed, California COVID-19 cases down 75% from 1 month ago. Stocks lower across the board today. Another day of wild swings. Traders assessing the latest geopolitical developments amid worries about a Federal Reserve policy mistake. Certainly Ukraine one consideration, the Fed another. Also crude oil. That was on everybody's mind as well today. West Texas Intermediate crude rallying above $95 a barrel, $94.88 right now on WTI, up by 1.9%. Brent up 1.5%, $95.90 barrel of Brent was above $96. Keep in mind that we got to go back to 2014 to get that $95 print on WTI. 10-year yield 1.99%. S&P down 17, drop there of 0.4. The Dow down 171, down 0.5. NASDAQ virtually flat on the day. NASDAQ Composite Index down by less than half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, check out shares of the online professional medical network for doctors. We're talking about Doximity. They're up roughly 13% so far this year, and a lot of that gain is thanks to a 24% pop after the company reported earnings last week, and that's when it said third quarter results beat expectations, Tim, and it also gave a full year 2022 forecast that was ahead of the consensus.
Yeah, $97.9 million in revenue, an increase of 67% over the same quarter last year, 13% above the midpoint of guidance. Anna Bryson is CFO of Doximity. She joins us once again on the phone from San Francisco. Anna, how are you?
I'm great. How are you? Thanks so much for having me.
Hey, we're doing well. It's good to have you back with us. What's working really well for Doximity right now and thinking about 2022?
Sure. So a couple things. I think the main piece to call out here is that our growth really continues to be led by our existing customer base. They're really embracing the shift to digital here in healthcare marketing. And we had a net revenue retention rate of 171% in Q3. Our customers continue to really see high ROI by utilizing our platform. So we're really proud of the fact that our customers continue to come back and continue to spend more with us.
How does your retention rate increase by 171%? Because you basically have a base, right? And then you hold on to them. Wouldn't that be 100? Explain that to me.
Yeah. So our net revenue retention rate is a trailing 12-month metric. So it needs to be looked at in context of our trailing 12-month revenue growth rate, which was 79% this past quarter. So it's that trailing 12-month growth rate that it needs to be looked at next to, as opposed to just our year-over-year growth rate, which was 67%.
Anna, you also said that your growth is led by your existing base. Remind our investor and investment audience, who is that existing base?
Absolutely. We sell to the top health systems and pharmaceutical manufacturers. We have all 20 of the top 20 health systems and all 20 of the top 20 pharmaceutical manufacturers as our customers.
Hey, Anna, what happens if we see a return to in-person doctor visits significantly on the other side of the pandemic? Do you see that affecting your business at all?
Sure, it's a great question, and it's something we definitely talk about a ton internally. So we think healthcare is really in the midst of a once in a lifetime really shift to digital here, and we think that we're going to see a decade-long shift ahead of us. We certainly think that in-person marketing will continue. We think that our customers will adopt really more of a hybrid model, kind of in the same way I think the world's adopting a hybrid model and a work-from-home perspective, where we're never all going to be in the office 5 days a week from 9 to 5 again. That's really not the world that we're looking at ahead of us. And it's the same thing with healthcare marketing, where we assume that our customers will adopt a mix of digital and face-to-face going forward. So I think that's something that we're really thinking is going to be the future here, and we're really excited. I mean, healthcare is still incredibly under-indexed on digital, and we look forward to seeing that continue to gain share over the next decade here.
Well, your bread and butter, healthcare marketing, explain that, right? Because your platform is medical professionals, doctors largely. And so this is a way for healthcare companies, pharmaceutical companies, you name it, right, to reach out to that community.
That's correct. We help our customers really connect with the right physicians about new treatments, about clinical trials, about patient referrals, really, to name a few. And then on top of that, we also have a hiring solution where we work with our health system customers to help them fill jobs and, get physicians to the right job, whether it's a temporary job or whether it's a permanent job. So we also have that
I'm
as
really
part of
glad.
the business.
Yeah, and I'm really glad you brought that up because we've been talking to a lot of healthcare professionals around the country who are telling us that they and their colleagues are absolutely burned out. We've all seen the stats about people leaving the profession and jumping out of that job pool. What are you seeing in your data?
Oh, absolutely. It's a great question. It's a great point. There's certainly a massive physician burnout and definitely a shortage there. And we're really focused on one of our parts of our business is called Curative. It's a temporary and permanent physician staffing business. It actually grew over 90% year over year. And a lot of that is because we're really working closely with our physician members to help them get to that right job so that we can help with that physician shortage. So we're working very, very hard to help ensure that, hospitals are staffed up. It's a very, very important part of our business.
How nervous are you guys that Amazon and some others who, have consistently and kept their eye on healthcare as another avenue of growth, that they're not going to do exactly what you guys are doing?
I don't think we're as nervous about that. I think what we're more focused on kind of being the Shopify versus to Amazon here. And we have a stable of physicians where we have over 80% of physician members already using our platform. And they use our platform for a variety of really day-to-day purposes, whether it's, workflow tools like secure messaging, referrals, telehealth. And we're built by physicians for physicians. So we think that really kind of gives us a competitive edge there where our physician members will keep coming back and keep utilizing our platform. So I wouldn't say we're necessarily as concerned about that.
All right. Or maybe Salesforce. Like this could be
Microsoft?
Just thinking everybody's eyeing healthcare because they see it as such a growth opportunity. Anna, great to check in with you. Anna Bryson, she's CFO at Doximity on the phone from San Francisco. As I mentioned, stock huge pop when it reported earnings last week, 24% higher. It is now up about 13% so far here in 2022.
You're listening to Bloomberg Business Week. Coming up next, we are talking all the ads in the Super Bowl last night. This is Bloomberg.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I was looking to see ratings for the Super Bowl.
Are they out yet?
I don't know that I've seen them. I'm just looking real quickly. But you know who cares is the advertisers.
Yeah, they certainly do, especially when they're ponying up $7 million in some cases for a 30-second spot.
It's a lot of guacamole.
It is a lot of guacamole. That's right. We're going to go all in on those spots from last night with Josh Mandel, President of Advertising at Technicolor Creative Solutions. Joining us, they produced, more than 30 of those spots last night.
They were busy leading up to it.
Very busy leading up to it. In the meantime, though, before we do that, let's check in with Charlie Pellet on the market. Hey, Charlie.
Well, hello there, and we have got lots going on after the close of trading here. Two beverage industry giants could be getting together. Sources tell Bloomberg talks between Monster Beverage, the maker of energy drinks, and Corona brewer Constellation Brands are underway about a combination. Those talks said to be progressing. The sources say an agreement could be reached in coming weeks if negotiations proceed smoothly. Also after the closing bell, Intuit, it is the maker of the TurboTax software. It has reduced its fiscal second quarter revenue outlook. Shares down now by 4%. Avis Budget reporting adjusted earnings per share for the fourth quarter that did beat the average analyst estimate. Shares after hours down by about 3.5%. And Berkshire Hathaway is reporting a new position in Activision Blizzard in the fourth quarter, buying 1.9% of the company's outstanding stock. Stocks had another session of wild swings today as traders assess the latest geopolitical developments amid worries about a Federal Reserve policy mistake. The S&P ended the day again to underscore choppy session, down 17 points today, a drop of 0.4%. The Dow down 171, down by about 0.5%. NASDAQ fell by 0.5 point, little changed on NASDAQ. 10-year yield 1.98%. Spot gold up 0.7%, 18.71 the ounce. West Texas Intermediate crude up 1.9%, 94.84 barrel on WTI. Well, as for the market backdrop, Michael Sheldon is Chief Investment Officer at RDM Financial Group. He was our guest right here on Bloomberg Business Week.
Unfortunately, we're probably going to be in this sort of trading range, and markets are likely to remain unsettled for the near term until we have more clarity on the outlook for inflation, shifting Fed policy, and more recently the situation in Russia and the Ukraine.
Michael Sheldon again of RDM Financial, recapping stocks lower. S&P down 17, down 0.4%. 10-year yield 1.98%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we all know there are two reasons people watch the Super Bowl. One is, of course, the football, but the other one, the commercials. NBC broadcast the game. It said it sold more than 70 of these spots. Some of those, Carol, cost as much as $7 million for 30 seconds. One of those getting a lot of attention today and last night, that Rocket Mortgage ad. It stars Anna Kendrick, features a bidding war among Barbies. Check it out.
Barbie really wants this dream house. It's got stunning views and a slide. Barbie's ready for fun. So cool. And Barbie found out about this dream house with an alert from Rocket Homes. She did? Well, it's a super competitive market. Everyone wants to buy the dream house. Better offer Betty. I'll go 10 over asking. Cash offer Carl. Straight cash. House flip for Skipper. Let's tear it to the studs.
Well, there you have that.
Barbie had her financial house in order. That's all I'm going to say.
She certainly did. Yeah. I mean, you have to in this market, right?
Yep.
Someone who knows quite a bit about advertising in the Super Bowl is Josh Mandel, President of Advertising at Technicolor Creative Studios. Technicolor Creative Studios produced 29 of last night's Super Bowl commercials, including that one from Rocket Mortgage. Josh, how are you?
Very well, thanks. How are you doing?
What is the secret to creating a successful Super Bowl ad?
Oh, I wish I knew. I think that's what brands are struggling for every year is to capture the magic of the Super Bowl. But I think what we saw this year especially was a return to optimism and positivity. You'll remember last year's Super Bowl, it was right in the middle of the pandemic, and I think a lot of brands felt like they needed to address the malaise that people were feeling. But the Super Bowl, it's a moment of celebration. It's a moment, I think it's described as our kind of last cultural campfire moment in the entertainment space, where you've got people across demographics and race and gender coming together at one moment. So it's a big moment for brands to leverage, and even though we see declining year on year raw numbers of viewers, it's still the best moment in America to reach a big swath of our population.
It's definitely a come together moment, right? And destination viewing, and you're going to watch it live. It is an audience like no other. Hey, Josh, having said it, I agree with you. I love the optimism. I love the creativity. And to be fair, even kind of take away the pandemic year or the beginning of the pandemic, that I feel like the ads over the last few years have gotten, and forgive me if you've been involved in them, but have gotten not as entertaining and engaging. And we all talk about it in the newsroom, after the big game. What goes into, and what was the thinking behind so many of the ads this time around in terms of style and who they wanted to target?
Yeah, well, I think, there were a couple of big trends this go around. There was definitely a return to celebrity as trying to create some bang for the buck. So, we saw the sports figures in the Michelob ad. We saw the actors in the Nissan ad, Star Power with Amazon and Alexa. So there's a big swing in terms of brands opening up their paychecks or their pocketbooks to try to gain attention. I think the other thing
was it a younger audience too, though? Were they trying to go after a younger audience?
I think they're going after, you can see with the figures that they're using, they're going after as big a swath as they can of the population. They want to appeal to people my age. I'm a man of a certain age, but definitely, young people as well. I think the halftime show was, not an advertiser thing as much as the NFL, but that was an attempt to reach a broad audience as well.
Yeah, well, it does feel like, look, I'm an elder, what they consider an elder millennial, okay? So closer to 40 than 35 is what I'll
I love that.
say.
I had no idea they were elder.
And I got to tell you, every time I looked up at the TV, which was, for the 4 hours that I watched the whole time, it was someone who I recognized, whether it was the halftime show, music from my childhood, absolutely growing up in Southern California, of course, like people I was listening to in high school, whether it's Snoop or Eminem, and then the actors and actresses featured in these ads. It really felt like for the first time that this was a Super Bowl that was geared toward someone my age. We only have about 40 seconds left, but then we're going to come back with you, Josh.
Sounds good. Yeah, I definitely think you saw what you didn't see is probably more the bleeding edge of where technology and social platforms are right now, which is kind of like TikTok styled user-generated content. That was a big theme 3 years ago. Some of the brands actually solicited ads from people in the world. So again, I think this was a moment where brands wanted to own their platform at the Super Bowl.
All right, we're going to come back with Josh Mandel, President of Advertising at Technicolor Creative Studios. We'll continue the conversation in just a moment. Just want to mention a couple of headlines just crossing the Bloomberg. Citigroup CEO Jane Frazier's total 2021 compensation, $22.5 million. We've been keeping track of them, over the last couple of weeks. And we did have Canada's Prime Minister Justin Trudeau invoking Emergencies Act to quell protests. We've seen protests at the border. A lot of it has to do with vaccinations.
Well, let's get an update on world and national news. Nancy Lyons standing by in Washington, D.C. Hey, Nance.
Thanks, Tim. The Kremlin is signaling it is ready to keep talking with the West about security grievances that led to the current Ukraine crisis. Former Defense Secretary Leon Panetta tells Bloomberg this is definitely a dangerous moment.
The more that you have this concentration, the more you build it up, the more there's a chance that a mistake can be made, a misjudgment can be made, a wrong move could be made. That could obviously explode the situation.
Panetta says the proposed sanctions on Russia's energy sector are likely the biggest concern for Russian President Vladimir Putin. Well, President Biden is marking 4 years since the Parkland High School shooting with a call for Americans to keep each other safe.
The president issued a statement 4 years to the day 17 people were killed inside Stoneman Douglas High. He says the heartbreak of that day sparked an extraordinary movement that's making sure victims, survivors, and responsible gun owners' voices are louder than those of gun makers and the National Rifle Association. The president's efforts to pass tighter gun laws in his first year have come up short. Michael Bloomberg, founder and majority owner of Bloomberg Radio parent company Bloomberg LP, donates to groups that support gun control, including Everytown for Gun Safety. In Washington, I'm Nathan Hager, Bloomberg Radio.
A federal judge says it doesn't matter what the jury decides in Sarah Palin's defamation suit against the New York Times. He says he plans to dismiss the case for lack of evidence. Palin sued the paper over a 2017 opinion piece in which an editor incorrectly linked her to a deadly shooting. The paper retracted the piece less than a day after publication. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Pretty heavy day, a lot of news flow, and we certainly see it playing out in the markets today, and we'll see what tomorrow brings. A lot of economic news this week. In the meantime, we're going to get back to our conversation with the president of advertising over at Technicolor Creative Studios, Josh Mandel. We're talking about Super Bowl spots. In the meantime, I have to say I was really entertained. And my husband is so quick on the remote, and I'm like, you can't go through the commercials.
What does he want to watch instead?
He just wants to, he gets late to the game, and, we just, kick around the commercials.
Yeah. So let's talk about some of these highlights, Carol, because there were certainly a lot. And I got to tell you, this was the first time I'm giving, anyone who knows me knows that I'm not like a huge obsessed sports guy, right? So what though I found is that because my wife likes the Bengals, I got super into this game, and I got not just into the commercials this time, but absolutely into the game. I'm going to keep watching from now on.
I know you did. I was impressed.
But
from what you said,
the star power that we saw with this year's was absolutely huge.
Celebrities everywhere, which always begs the question. I mean, this is one of the conversations we were having in the newsroom. It's like, how much do you think this guy,
Larry David?
Larry David, we're like, how much do you think he gets for that commercial?
I have no idea.
I
think
idea.
Eric Balchunas over at Bloomberg Intelligence put out a poll.
Did he?
Yeah, that I haven't seen the results yet. But asking his tweeters how much they think he got. But someone like Colin Jost and Scarlett Johansson too, and that Amazon ad. And then you also see the element of social media here too, Carol, where these companies start to push little teasers ahead of time. And even in the Amazon case, Amazon airing little versions of that ad ahead of time as sort of previews, which has been going on for years.
Remember with Mr. Peanut, they did that too?
Yeah, but that one did not end well.
No, well, Mr. Peanut. Yeah, sorry, rest in peace.
Yeah.
But it was really cool. Even the NFL had a spot, which I thought was really reaching out to a younger audience. It was kids playing a game, and the characters came out, and they were like,
that was cool.
It was just really technically just so well done. Anyway, we're going to get back to Josh Mandel talking about the Super Bowl ads in just a moment on Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Monster and Constellation Brands talks said to be progressing on a beverage tie-up. After the closing bell, we heard from Intuit, the maker of TurboTax software. It is reducing its fiscal second quarter revenue. Intuit shares lower now by 4%. The Dow, the S&P, NASDAQ all lower today. NASDAQ little change, down by just about half a point. Stocks faced another session of wild swings as traders assess the latest geopolitical developments amid worries about a Federal Reserve policy mistake. S&P was down 17 points today, down by 0.4%. The Dow down 171, a drop there of 0.5%. 10-year yield 1.98%. Spot gold up 0.6%, 18.70 the ounce. West Texas Intermediate crude oil up 1.9%, 94.91 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's get right back to our guest, Josh Mandel, president of advertising at Technicolor Creative Studios. He joins us on the phone from Los Angeles. Technicolor Creative Studios produced 29 of the Super Bowl ads last night, which is just an astounding number. Hey, Josh,
we really want to know, Josh, are you exhausted?
There's a lot of people who work in our studios who are very tired right now, yes.
Okay.
And when do you start thinking about the next round? Does it start early, or does it come like in 6 months or something?
Yeah, it typically picks up around the brands who know that they're going to be in the Super Bowl for sure. We'll start conversations with them in September, October.
Oh, okay.
Around the scripts that they're seeing, and then when they lock in on an idea, we're typically working December and January pretty heavily.
Okay.
Hey, we gotta know, and just ballpark it for us. How much are these celebs paid to hawk products?
Ballparks.
It runs a gamut, right? I think if you're just buying star power, you're probably talking millions. But a lot of times there's, maybe a movie coming up or a TV show. They could use a little bit of extra energy in getting the celebrity out there. So it's definitely a sliding scale depending upon what the situation is.
But if you see a star in one of these spots that you haven't seen maybe in a couple of years, like we're talking between $1 and $10 million for 30-second or 60-second ad?
Probably not a size 10, but if you're talking about somebody who's definitely got current star power, and the majority of us watching a spot will be excited to see them in it, then the brands are ponying up for that.
So, the Toyota Keeping Up with the Joneses, who do you first reach out to? Is it Nick Jonas, to get him on board? Because that ad didn't work unless you got them all, right? Or at least...
or you needed some different Joneses. There are a lot of Jonases, Carol.
Yeah. Well, there's not a Jonases, but you wanted Jones.
A lot of Jonas brothers.
Famous Jones.
There are a lot of contingencies built in. I've been involved, not in my current job, but I have been involved with ads where we were locking the talent the night before a shoot. So you're definitely looking at a few different solutions based on the creative concept.
Wow.
Creativity. And I feel like this latest round of commercials, it was really fun to watch. And I'll be honest with you, there are seasons, where I'm flipping through them because I'm like, okay, not entertaining. A lot of technology. And you just think about visually what you can do nowadays. It's just mind-blowing. How do you think about, involving technology into ads, or is it based on what the customer wants, or what's that creative process like, Matt?
Yeah, well, our company is founded on using technology in order to bring these big ideas and these dreams to life. So I think what you're getting into, this idea of creativity, is it's kind of the difference. I say there's a difference between running an ad on the Super Bowl and actually making a Super Bowl ad. And if you're walking into the game with ambition and really wanting to own the moment, then you're going to come up with concepts and executions that require an awful lot of work from a production company. You've got usually a named director attached to it. And then us as the VFX company kind of making sure that the car that's flying through the air looks real, right? So I think that's the difference. You can see the difference in the brands who understand that creativity is a lot of times the force multiplier in our business. It's one thing to spend the money and show up on the Super Bowl, but if you're not kind of owning the moment, then maybe your dollars are better spent elsewhere.
Who writes copy for these?
It's done by the agencies, the advertising agencies. So they'll come up with a concept and they'll script it up in partnership with the brand. Mm-hmm. And then once they've got a creative concept, that's where we get involved.
And then what do you guys bring to it?
So, for instance, like we worked with Pepsi and F. Gary Gray and production company on that 3-minute teaser for the halftime show. So if you saw that spot, you'll know that Eminem was in a rap battle with his younger self, and the words that were appearing in the air, that's all digital work that we're doing in order to bring that to life. So that would have been a concept that the agency came up with, that Eminem was in a rap battle with himself, and then once we understand what the concept is, we step in and say how it can be executed and to what level of visual fidelity we can pull it off.
This time around, social as much as linear, like, we're talking a lot about the ads that we saw in the middle of the game, but social's a big component of it. How important was social this time around?
Well, yeah, I think you saw a real split between brands who got their work out early as well as brands that were waiting for the moment and didn't leak it out early. I think when you're talking about a media spend, and you guys highlighted that before, that's just the media spend of $6.5 million is the average. Right. Most brands want to leverage that as much as they can. So they'll go out early, they'll get it out in social channels, they'll at least tease it a bit, and then hopefully, if the spot's popular, then they'll actually carry over for a week or two after the Super Bowl.
What about when it comes to calls to action? And, we saw a lot of QR codes in this one. Coinbase had a QR code, and then, of course, the Rocket Mortgage one had that QR code for StockX in it as well.
Right. Yeah, I mean, how many people are actually utilizing that? I'm sure that
my hands were deep in nachos. I'm just going to tell you.
You weren't pulling out your phone.
I was not pulling out my phone.
Yeah. The Coinbase one probably got some. It was just so the mystery of what that thing was dancing around the screen. I'm sure it got a lot of reaction to it. But you guys will remember a number of years ago, QR codes were introduced and flopped pretty quickly.
Yeah. Took the pandemic for them to catch on.
Exactly right. I think it's the pandemic and the use in restaurants that's flipped into a real world use case, and now I think we'll be seeing more and more of them.
Well, what's funny is Coinbase, after they put out that ad, they crashed, I think, that was like trending on social. We've got a story. They're back up after outage reports following that Super Bowl ad, so it definitely did it. Can I just ask you, the Uber Eats one, Uber Don't Eat, how many times did you, though, initially play it to your group and they're like, wait, I don't get it? But it was clever because it made us talk about it. But was there folks in your, focus groups who were like, what?
Yeah, I'm not sure about the development of that one. I wasn't involved in the front end of it. But look, that was another fun one. I think they did some great casting.
Totally.
The actors that they had in there really carried a lot of the story.
Hey, Liz, just got about 30 seconds left there. Is there an ad you didn't do that you're like, wow, that was pretty nice? Just quickly.
I thought that the Doritos Cheetos ad was fun. There was a nice energy to that, and when it started to go on longer than a 30, I was a little surprised, but I think they carried the day with that one. I know that one was in the top 5.
That was with the animals, right?
Just because it's our own baby, I was really, really fond of the Rocket Mortgage one that you guys played earlier.
It was pretty cool.
Yeah, it's getting a lot of attention today.
I got to tell you, anytime you put animals like talking and acting like humans, all in on that. I'm just all in. Josh, this was fun. Good luck. I'm sure you're thinking about, well, at least you got a few months before you have to think about the next round of Super Bowl ads. Josh Mendel, President of Advertising at Technicolor Creative Studios. What?
You and I were in touch with Enon Kreis, the CEO of Mattel. Yeah. He sent us a statement. Barbie was excited to be asked to star alongside Anna Kendrick in Rocket Mortgage's Super Bowl ad.
Man, Barbie
cool,
just
right?
having a whole other life, man. I'm kind of loving it. All right, guys, Monday, one and done. Stick around. Sound On with Joe Matthew coming up. Have a great evening.